Hey, we got a burst of mortgage fraud, and we got maybe significant Mortgage Investment Corp trouble. So, start with the mortgage fraud. Something new, something I've never actually seen much of before, but it's suddenly become big. Look, we know the old mortgage fraud. The mortgage fraud where you give a bank fake income documents, the bank catches a lot of them, doesn't catch some. We were all familiar with that. It's been talked about constantly online. There's been whole marketplace television shows about it. Like there's actually been a whole show, like a half-hour show about it in great detail. Okay, so that's the mortgage fraud that we've come to know. It is the mortgage fraud where fake income documents are given. That's seemingly become more difficult because there's a new version of this thing happening, a new version of mortgage income fraud where people are producing fake bank statements and business licenses to make it look like they're self-employed. So this is not like trying to show you've got net income that justifies the mortgage. This is going to alternative lenders who typically charge higher rates, have significant fees, and saying to these lenders, hey, I'm a self-employed guy. I make a lot of money in my business, but I just don't show a lot of income on my taxes. So here are my bank statements to show I have a highly successful business. And they're all fake. I'm reading a case published by FSRA, the mortgage regulator, of 19 fake bank statement frauds. The bank statements were all false. Over the course of 1 year, just one lender, 1 year, 19 fake alternative lending bank statements. And they've got rid of the guy, finally, FSRA. God bless the regulator. Good regulator now, much better than ever before, going hard after those people who are doing wrong things. But this was new to me. This is fake income documents, but not the usual tax documents and pay stubs, but fake bank statements to get a more expensive mortgage. So I guess people are that hard up. I mean, it's a function of the business cycle. It's a function of the real estate cycle. When the economy's getting tight, people say, oh, well, it's going to be too hard for me to prove that I'm actually employed because I'm not. I just run this sort of shaky business, or maybe I don't work at all. And the best route is, hey, I'm going to pretend to be self-employed and I'm going to pretend to have a successful business. And here's how I'm going to go about it. Now, this was done by, like I said, one mortgage broker, 1 year with one lender, 19 separate files, nearly $12 million worth of lending. This has all been discovered by the lender, forwarded to the regulator. Regulator is bouncing the broker, which is great. And the regulator is coming down pretty hard on the brokerage too, because if the lender told you about these documents 2 years ago, why are you still asking to renew the person? Anyway, that stuff for another day. But that's interesting to me that people are looking and willing to pay for fake documents to a mortgage broker to get bad rates. This is something new. And what do I mean by trouble with mortgage investment corporations? Quickly, mortgage investment corporations are companies that just do private lending. They solicit funds from large investors, so it might be given $250,000, might be given $1 million, might be given $50,000. Put it into the fund is lent out in mortgages, and the interest flows through to the investor. So it's putting a bunch of mortgages together, flowing it through. It's not a syndicated mortgage. It's a bunch of mortgages in a mortgage investment corporation. People have invested in it, flow the money out. So I'm hearing about one particular one stop paying. The investors are saying, hey, where's my quarterly payment? Where's my monthly payment? What's going on? I haven't seen anything. And they're not getting any reasonable response. So for most of these large corporations, if they're big, if a MIC is big, if a MIC is like hundreds of millions of dollars, when you sign up, you realize they can do something called gating the fund. You can gate the fund, which means, hey, normally we've been sending you distributions, and normally within a certain contractual reasoning, you can get your money back if you need it within a certain amount of time, and there's limitations. Well, you can even stop distributions. That's usually inside of every contract. Is hey, we can stop distributions if we have to. But this is not that. The fund has not been announced as gated. And there's not a reasonable published explanation because it's easy. You just say, hey, we're going to stop making distributions for this fund for the next 6 months. We advise you later. You can publish it. Now, maybe you don't want to publish it. I don't know the inner workings of these things, but this is what I'm hearing. So again, why is this coming up? Why are these companies, which are some cases companies that have been around for years, all of a sudden in trouble? It's the business cycle. It's the real estate cycle. So some of these companies were lending on things that were just other, not necessarily all mortgages. They might have been lending on some other types of business loans. And they also, in their mortgage portfolio, they may have been lending on some development, or they may have been lending on some construction situations, which those situations just are not working well today in Ontario, particularly Ontario. Development, construction is facing hard times for new stuff, building new stuff in Ontario. And if those aren't working out for the builder, it cycles back down to the lender who's been financing the builder, and then eventually to the people who've given the money to the lender. That becomes a problem. This isn't a bank problem. Nobody get worried about their bank. But it is a MIC problem, a Mortgage Investment Corporation problem, and we may be hearing more about it.